Welcome back. This is Ask the Compound. It's a season of thanks. We're thankful for all the questions we get from our audience. On today's show, we're tackling questions on, do you need to be diversified as a younger investor? Are younger generations being left behind? Is the older generation pulling up the ladder behind them? Is it too late to buy Bitcoin? Can ChatGPT create a sound financial plan? Does it make sense to pay off your mortgage and count that as fixed income exposure? Remember, if you have a question for us, askthecompoundshow@gmail.com. Today's show is sponsored by The Compound. We've got a lot of different properties here. We produce a lot of content. Podcasts, blogs, YouTube shows. What else do we do? Shorts, videos. Check out thecompoundnews.com. You can subscribe to the Compound Insider, bringing you the latest on all of our stuff. If you missed anything, there's also some goodies in there that you don't get anywhere else. Very helpful just as a refresher of, hey, just in case you missed it. Also, if you are an advisor, check out advisorunlock.com. That is our channel exclusively for financial advisors. I'm on there doing videos. Michael is, Josh is. We're talking to people in the industry. We're talking about wealth tech and wealth management best practices. We're talking about retirement. Josh came up with a name for my show called Ben with the Benefits, and I think it's the best named property we have. Right? It's pretty good.
Yeah, it's a good one.
Josh is good at coming up with names. Every time we need a name, we go to Josh. He's an idea generator. Advisorunlock.com to learn more.
I thought you were going to surprise us with a razor sponsorship today, you know, now that you're all clean shaven.
Very sleek. I shaved my beard off. Feels different. You know, like the comments, some people say, Ben looks amazing with a beard. And then the other person says, Ben looks like an idiot with a beard. Shave it off. And so I'm balanced and diversified as well in the comments.
That's what makes a market, you know?
It's true. Let's do a question.
Okay. Up first today, we have a question from Philip. You often emphasize diversification, and I have a question about it. As someone in their early 30s investing for the long term and comfortable with volatility, how important is diversification? While I understand that it reduces volatility, doesn't it also dilute long-term returns? I'm currently invested entirely in U.S. equities, primarily through ETFs with some direct investments. My reasoning is that the U.S. market has been the best performer over the last century, continues to attract top global talent, and builds the world's largest and most successful companies. Given this, why wouldn't I just invest everything in SPY? And for those new here, SPY is just the S&P total market, or what exactly is it?
S&P 500 index fund.
Okay. All right.
You don't know what SPY is? Come on, Duncan.
I couldn't remember. I couldn't remember exactly which one it was.
That's the S&P. That's the very first U.S.-based ETF. The first ETF ever was actually in Canada, as my friends to the north like to remind me. But the first one in the U.S. was the SPY. Sure, if you only pick the best performing asset class and invest in that, any diversification will make your returns lower. That is true. The question is, can you pick the best performing asset class, not of the past 100 years, but over the next 5, 10, 15, 20? Sir John Templeton once said, the only investors who shouldn't diversify are those who are right 100% of the time. Okay? Sounds easy. So now you could make the case the S&P 500 is diversified, right? First off, I am a bull on the future of America. Betting against corporate America is a terrible idea. Anyone who does so is an enemy to me, okay? I'm bullish on America. And sometimes I think the U.S. stock market feels like the only adult in the room anymore when it comes to our institutions, right? I trust the stock market over just about any other political institution right now. And the stock market is not political. Maybe that's why. The S&P 500 is almost like an NBA all-star team of corporations, right? These are the biggest, most well-run corporations in the world, and they are global. Something like 35 to 40% of all revenue comes from overseas for these big companies. So I'm not someone who's saying the reason I diversify is because I'm betting against the U.S. No, the reason I diversify is Daniel Chardon. There are time periods where the U.S. just simply underperforms. This is 2000, 2009. You don't have to go back that far to find a lost decade. The S&P was down almost 10% in total over the first 10 years of this decade, or of this century. European stocks did good. Mid-caps and small caps did good. High yield did good. Bonds did good. Emerging markets did great. REITs knocked it out of the park. So we had a lost decade in U.S. stocks. And then you had all this other stuff that did actually just fine, considering how bad things were. So the question is, chart off, can you handle that kind of situation? Would you keep shoveling money into the S&P 500 under those circumstances? Would you lean into the pain? Obviously, if you're a young person, maybe a lost decade is not the worst thing for you. It's the best thing for you because you're putting money to work still. But the question is, if there's other areas of the market that are doing better besides the S&P, it could be small cap stocks, it could be mid cap stocks, it could be dividend stocks, it could be foreign stocks or emerging markets or China or some other country, India, I don't know. Can you handle that underperformance? It's easy to say, let's keep investing in the best performing market. That's simple. Look back at the last 15 years. You're an idiot if you invested in anything else. You feel like an idiot at least. Would you lean into the pain? Here, Daniel, one more chart. This is a chart I made that shows the country stock market returns by decade. This is from the perspective of a U.S. investor, so for currency purposes. You can see the 1970s. U.S. did okay, middle of the pack maybe, lower pack. Japan, Canada, France, Germany, all much better.
Sweden in the 1980s? What was going on?
Sweden actually did better than Japan, which is surprising. So Sweden did amazing. Italy did amazing. Spain did amazing. It really wasn't until then. And Sweden did great in the 1990s too. U.S. did great in the 90s, but the 2000s, look at back. So the point is, yes, in the 2010s and the 2020s, the U.S. has knocked the cover off the ball, and it's done the best. Are we sure cycles in the stock market are over? Danny, you can do chart off. Maybe. Never say never when it comes to market relationships. Things that have worked for decades sometimes stop working altogether. But I do know that the U.S. stock market now makes up 65% of the all-cap or the all-country world stock market index. Is it going to go to 75%, 80, 85%? Is the U.S. just going to continue to swallow the rest of the world, Pac-Man style? Possibly, but I wouldn't bet my life on it. So listen, if you have all your money in large-cap U.S. equities over the next 10, 20 years, you're going to do okay? Probably. But I think we're going to look back in 20 years and go, it was so obvious that the S&P kept winning because against the rest of the world, because just look at all the built-in advantages we have. We have the best companies, we have the tech sector, all this stuff. Or it's going to be so obvious that the S&P was so overvalued and it had to lag. Just look how high valuations were. So one of those two things is going to be true in like 10 or 15 or 20 years. We're going to look back and say, oh, geez, it was obvious. The problem is it's not obvious to me right now that for sure U.S. stocks are going to be the best, and that's the thing. So do I think you'll be all right if you have all your money in the S&P 500 over the next however long you're investing, 10, 20, 30, 40 years? Probably. Will you stick with that strategy when it inevitably lags behind? That's a question only you and your past behavior can answer. That's why I diversify, because I don't know what the future holds.
Do you know what company's Swedish that we talk
What's
about
that?
on the show a lot?
Oatly?
Yeah.
It's a Swedish company?
They're based in Malmö, Sweden.
Okay, if Oatly would have been around in the 70s and 80s, Duncan would have been king of the world.
Yeah, true. And Spotify, right? Spotify Swedish?
Yes,
I think
that's right.
so. Yeah.
All right, let's do another one.
All right, up
Another
next-
younger investor question.
Yep. This one's from Chris. As a young millennial, I'm having a hard time with my place in the generational hierarchy. Full disclosure, I missed out on 3% mortgage rates and lower housing prices, so this likely colors my thoughts. My parents' generation, the baby boomers, had it so much easier. No student loans, much lower housing prices, and they didn't have to bring work home with them since smartphones didn't exist. Now, with remote work, I feel like I'm competing with far more people for jobs. It feels like they pulled the ladder up behind them. Am I wrong?
Okay.
A little bitter, but I mean, they make some good points, you know.
Yes, young people definitely did get a raw deal when it comes to the housing market. And I've said this over the past few years where people have been complaining about the economy. The people who deserve to complain the most, in my perspective, is young people, because it's not fair and it's not your fault, right? Robin Williams on Good Will Hunting, it's not your fault. It's not your fault. So I think it's absolutely you did get a raw deal. Now you could quibble with baby boomers and say, they had the 1970s inflation they had to live through. They had 18% mortgage rates, all this stuff. I just want to give a little tough love to Chris here, okay? Listen, complain, bitch, moan, get it out of your system and move on. There's nothing you can do to change the system, right? Don't be one of these people that goes through life with a victim's mentality, constantly blaming like the system or the government for your place in life. That's a loser's mentality, and it's not going to help you improve your standing in life, right? My first job out of college, I made $32,000. I didn't blame anyone but myself, because I looked at myself in the mirror and I go, wow, I need to learn a lot more. I need to make myself more employable. This is not a good situation. I had friends who were making way more than me. I realized I needed to bust my ass and learn way more than I knew at that time. So coming out of the great financial crisis, I think it was probably 2010, a year before, I'd talked to my boss about getting a promotion and getting a raise. And she said, do these things and then come talk to me in a year. And I walked in and she flat out told me, no, you can't get a raise. And we didn't have the budget for it. It wasn't the right time. We were in the great financial crisis. It was easier for people to say, listen.
I thought you were a really good negotiator.
I thought I was too. So here's the thing though. It was easy to say back then, right? People had this mentality of you should feel lucky to have any job at all. The unemployment rate's 10%. In this economy, you should feel lucky to have a job. And so it was that moment I decided I need to take things in my own hands. I don't want my income potential to be determined by someone else's budget or someone else's thought process or So that's what I did. And sure, was I bitter that the economy sucked back then and it wasn't my fault the financial system was teetering on the edge of collapse? Of course. I was pretty mad about that. But it wouldn't have done me any good to wallow in my own sorrows. I felt sorry for myself a little bit, then I moved on. And I think you just have to play the cards you're dealt, make the most of your own situation. I think remote work can actually be a huge advantage for young people, right? You have more flexibility than any generation in history. You could get a job with really high income potential and live in a place that has very low standard of living. It may be easier in some ways. Listen, I think complaining is a national pastime now, and it's probably a good thing that back when I was going through some challenges in my career, I didn't have things like social media, because I think it's easy to go down that negativity rabbit hole and just, woe is me, the world is out to get me, I'm blaming the system and the boomers. And listen, let's be honest, Chris, if you were a boomer, would you have done anything differently, right? If we're really being honest, right? Okay,
I think
I don't want
that's
to
the
take...
part. That's the part that probably isn't entirely fair. Is I don't
Yeah.
think the boomers did anything like
No,
intentionally to
it
screw over
was
people that
luck,
came later.
luck and timing. They got
Yeah.
they happened to hit the ground running at the right time. So the thing you have to realize as an adult is no one's going to do this for you, right? You have to make things happen for yourself. That's my... I'll get off my soapbox now. Was that too much, or was that just enough tough love?
No, I think that was good. I think that was good. It's yeah. Don't give up. Don't be defeatist.
Yes. Again, get it out of your system, complain a little bit, rib your parents a little bit about how much easier they had, maybe try to talk them into giving you an early inheritance because they had it better than you, and then move on and make things happen for yourself.
Also, boomers
don't get
should
caught up in the
really
system.
stop talking. The one thing that I will say here, they should really stop talking about how, well, they paid for their college, by working through college. That's not a feasible thing anymore. It makes you sound very out of touch if you say that. There's no job, with very, very rare exceptions, that someone can pay for their own college while they're, while they're in school now.
My
College
dad was
is way
talking
too
about this.
expensive for that.
My dad was talking about this recently. I think he was telling me he paid like $150 a semester for tuition, and yeah, he would work odd jobs and pay for it himself, and it was yeah.
Right.
It's a different
That's
time.
not a possibility anymore.
But again, yeah, you play the hand you're dealt. All right.
Yeah.
Next question.
One thing on the job stuff there, I'll say, I think that you're going to see in coming years, my generation, millennials, stand up to the work from home versus in person thing. Because right now, companies are trying to have it both ways. They want people to be on call all the time on their smartphone, and they're making them come back to the office.
Right.
I don't think people are going to stand for that. It's going to be either or. You either get to have me on call all the time, or you get to have me in the office 9 to 5. It's not both.
That is
I
a
think
big
you're going to
difference.
see more people standing up to that.
My brother always reminds my father of that when he left the office, he could leave it there. He didn't have a BlackBerry or a smartphone. He never went through any of that stuff. And it was just easier back then to, out of sight, out of mind. You can't do that anymore. Now you're constantly tethered to it.
Right.
I agree.
All
All right,
right.
let's do another one.
Up next, we have a question from Rob. This is the question everyone's here for today, probably. I'm thinking of adding Bitcoin to my portfolio via one of the new ETFs, but it feels like I've already missed the boat with the insane run-up this year. Is it too late to add? I don't want to be a Muppet.
I haven't seen Muppet used in a while, actually. Remember that one from some dude at Goldman Sachs called all their clients Muppets?
Oh, I didn't know that. Okay, yeah, I was like,
Okay.
I've never heard
Yeah,
this.
Muppet. That's a early to mid 2010s thing, I think.
Gotcha. Okay.
Jeff Foxworthy voice. Does anyone know who Jeff Foxworthy still is? Like, if you become interested in Bitcoin at $100,000, you might be a performance chaser, right? Listen, if you weren't interested in Bitcoin at 30,000, 40,000, 50,000, 60,000, I would be concerned if it's only appealing to you now at 100,000, right? That's not to say it might not work out for you, right? The price might keep going higher. No one knows how high Bitcoin's going to go when it's on a heater like this. My question is, why now? The ETF came out in January. You can't say, well, they didn't have ETFs before. ETF came out when prices were much lower. I think the prices were still in the 40s by the time the ETFs came out. It was 50 maybe in the 40s. It's doubled since then. Why didn't you buy it back then? That would be my question. Also, Bitcoin is one of the most volatile assets on earth. Daniel, chart on. This is a historical look at the drawdowns in Bitcoin. So we're talking the history of Bitcoin is littered with 80 to 90% massacres. We're talking like 4 separate occasions now. I guess they call this crypto winter. Of course, each time it's come roaring back and broken out to new highs, but can you accept the 24/7 nature of crypto, the drawdowns that come with it? Chart off. Some people are questioning whether those Great Depression crashes are now a thing of the past. Right now there's more institutional money involved. There's financial advisors. There's large institutions. There's ETFs. That's a fair point, but I don't think you can really get rid of the 40, 50, 60% crashes in this asset class. That's the nature of the beast here. So I guess maybe if you really want to get into it, you can dollar cost average and leave it on there for a while, right? I'm going to buy every week or every 2 weeks or every month. But I would be worried about my personal behavior if it took Bitcoin 100,000 to pique my interest. That sounds like a pure FOMO play to me, and that just rarely works. Because the first sign of trouble, you're probably going to bail and go, ugh, why did I get in now? I just don't think it makes a lot of sense at this point to think about it as if you've missed the boat thus far.
Do you think we're now safely, I mean, as safe as you can possibly expect, but are we out of the tulip mania potential here? Has it gone on for long enough now where it's
Oh
not
yeah,
going to be?
I've said over the years that one of the most bullish things about Bitcoin is the fact that it won't die. Every time it feels like it should. The last time there was so much fraud and manipulation going on in the SBF stuff, there was no positive catalyst at all. And I think it got as low as, I don't know, 15,000 or something and didn't go much lower from that. And it's like, if this thing won't die now, when will it? And I think every time that happens, if you're still one of those people that is saying this thing is a tulip and it's going to zero, you're wrong. It's time to admit defeat on that. It's not for everyone, of course, but yeah, I'd be nervous about my own emotional state as an investor if at 100 I'm going, I think now is time to get in. That, sure, it could keep going up and you could make money, but I think I'd be concerned.
I saw there's a levered Bitcoin ETF now. So I was
going to
thinking
ask,
the other day, how many people are buying that right now? That seems
do
really
you own
toppy.
it, Duncan? I'm surprised. Do you have a 3 times yet?
No, I'm in one of the ETFs, but
Okay.
no, I'm not in the levered one. Even that's
Okay.
too degenerate for me right now. But yeah.
It is funny though, because I remember you telling me when the ETF came out saying, I think this is going to cause the price to run up really high, and it ran up into the ETF. But remember, for a while there, the price didn't go anywhere. After the ETF, and it took some time, and then it took off. So it doesn't. These things
Yeah,
don't
it was
always
very
happen
delayed.
exactly like you think you will. Yeah.
Yeah. I thought it was going to soar right after, but yeah.
All right. Next question.
Okay. Up next, we have a question from
Andrew.
Okay, yeah. Looking at my notes. Andrew, I have a portfolio worth 1.7 million. I would like to retire early with a desired income of $150,000 annually, which would require roughly $3.75 million. So I asked ChatGPT what it would take to reach my goal. Here's what it spit out. If you contribute $50,000 annually, it will take 11 years. If you contribute $75K annually, it will take 9 years. If you contribute $100,000 annually, it will take 9 years. What do you think? No wife or no kids right now.
All right, this was a follow-up from a few months ago. I think we answered a question or two from this guy, Andrew. He was a super saver when we gave him permission. I think he wrote back and gave us an update saying, hey, I bought a pool or something. And so he's been asking us for a while, Phil, help me out here. And I think he gave us a bunch more information. I'm still not sure how much I trust ChatGPT on financial planning stuff, so I had to kind of check the numbers here.
Is that a typo there? It says 9 years for 75K and 100K?
Well, I looked this up, and it's probably somewhere in the middle. So I looked it up, and it said, so I did the back of the envelope on this. So he said he wants to get to, 3.3 million something, 3.75 million. So he more or less wants to, I don't know, double his money. So I looked at this, and ChatGPT is assuming an annual return of only like 5 or 6% for these, which is not bad. I don't know if he gave that return as his bogey, but I like that someone is being relatively conservative here, either the AI or Andrew, right? One of them is being conservative. The funny thing is that if he put nothing into his accounts, because he was almost $2 million, if he put nothing into his accounts and instead just enjoyed some of the savings and grew his money at 6%, he would hit his spending goal in like 13 or 14 years. So guess what, Andrew? Either way, you are probably going to be fine. He's in his mid-30s. He has almost $2 million. He said he wants to retire by age 45. He's going to be just fine either way. It's kind of funny. I actually we've talked a lot about retiring early lately. And I read this book called How to Retire by Christine Benz. She's going to be on the Unlock with me in a couple weeks. And she talked to all these guys about their different retirements. And this guy said 7 years before he was planning to retire. And then he decided, well, I kind of like my work, so I'm going to keep working and just not spend for my portfolio. But every year I'm going to take these 2 massive vacations. And so his income that he was getting from his job was covering the massive vacations. So in his mind, he was saying, travel is part of what I want to do in retirement. So I'm going to take off a bunch of time each year and go on these huge, extravagant vacations. And he took these vacations he never would have otherwise. Like if he would have just retired, he would have felt differently about doing this. And I'm not trying to talk Andrew out of early retirement here. I'm just saying There's other ways to potentially think about this. Listen, if you're in your mid 30s, you have 2 million bucks almost, you're going to be fine either way, regardless of how much more you save. So take these numbers, and yeah, they'll probably work out. Keep finding ways to enjoy your money. And then the other understanding is, like, no one knows what their life is going to be like in 10 or 15 years. So just be flexible with your retirement plans, because you never know when life's going to throw you a curveball. That's my biggest advice here.
Do you want to use this opportunity to talk about fire any?
Nope, nope. The fire community in the comments are not happy with me, but we're going to agree to disagree,
Yeah.
right? Again,
Yeah.
and I've been around the block long enough to know that there is not one right way or wrong way to live your life financially, right? Some people just do not like spending money. It would physically make them able to spend money, just like some people do not like to carry debt. And I think to each their own. As long as you're happy and as long as you're content and you're in a good place financially, do what you want to do.
I like that.
One more
Okay.
question.
So last but not least, we have a question from Van. As someone who has prioritized investing over paying off my sizable mortgage and whose mortgage debt is currently held on adjustable rate terms, what do you think of my logic in foregoing holding any government bonds in my portfolio, as I'm already heavily exposed to interest rates via my mortgage? I'm not normally an everything in stocks type investor and usually espouse a more balanced multi asset approach. However, the idea that during a rate hike cycle, a significant chunk of my portfolio held in bonds would go down, while my biggest living expenses would go up, is unappealing to me. Whilst the opposite, i.e., having no bond exposure in my portfolio while my living costs go down during a rate cutting cycle, is perfectly okay. Got to be honest, whilst threw me off there.
No one
You
uses
don't
that.
see that one a lot.
I do like the name Van, so I'm thinking recently. I'm trying to bring back the Vans from Jeff Spicoli from Fast Times at Ridgemont High. You know, the checkered ones, the slip-on ones. I'm sure
Yeah,
there's a
yeah.
lot of teens in California that wear those now. Maybe I'm not hip enough to do that,
You gotta
but
get a skateboard if you're gonna wear
yeah.
those around.
Okay, so my question here is, you might be getting a little too cute here. I guess my question is, why do you own bonds in the first place? I look at bonds, so bonds could be for income, they could be for the yield. For some people, they're an emotional hedge to like stop the volatility. Other people use them as dry powder for rebalancing. And my point here is, you don't really get those from paying down a mortgage, right? You're looking at it from a hurdle rate perspective as being fixed income. So from that line of thinking, I guess that makes sense. I just think he's looking at it purely from the situation of 2022, where rates rose and bonds went down. And I don't think you have to necessarily always set your fixed income up that way. Fixed income could also be cash and T-bills or stuff that, or tips or stuff that doesn't really get slaughtered when rates rise. So I guess I understand what he's saying here. You could also, I don't know, take that adjustable rate mortgage and make it a fixed, so you don't have to worry about this rates rising. I'm sure that he's probably waiting for much lower mortgage rates before doing this, but I think you have to determine what the bonds are for in the portfolio anyway. Is it just some yield level that you're trying to jump over? I guess in that case, it makes a little bit of sense, but paying down your mortgage, I think, is a lot different than bonds, because it doesn't give you the same level of volatility protection or dry powder, the ability to rebalance and buy stocks. You don't get that from paying down a mortgage. So it's not the same thing in my eyes.
Okay.
Duncan, whatever you
I
do,
think I
don't take
follow.
out an adjustable rate mortgage when you get a house someday.
Okay. Yeah,
I
I've
think
heard a
it's.
lot about that. A lot about ARMs before.
I know that there are people who use them and have used them successfully, and I know a lot of people who, when rates kept falling for years and years and years, would say, "You fixed rate people are idiots. Rates keep going down, and mine keeps adjusting lower." The peace of mind you get from a fixed rate mortgage, I think, is hard to put a price on.
Do they give you a range at least, so you know like the highest it could possibly go?
I think it's all some market rate plus whatever. I don't think that
Well,
there really is a ceiling on it. Maybe some place, but I'm sure rates have gone a lot higher than anyone could have imagined, and so yeah, I think the, you know, bird in the hand is worth two in the bush kind of deal. But yeah, I don't view paying down a mortgage as the same thing as bonds. Some people in the personal finance realm do, not this guy.
okay,
Good
makes sense.
diversification of questions today. We covered a lot.
Yeah, I like this. I like to think this is going to come out on Wednesday. We pre-taped this one, but so tomorrow's Thanksgiving. Happy Thanksgiving, everyone.
Happy Thanksgiving.
How much do you think Bitcoin's going to be discussed around the Thanksgiving table this year?
it does seem that was the very first bubble in 2017 occurred around Thanksgiving, and people thought after Thanksgiving really supercharged it because all the nerds went to their parents' house and told them about it, and people got really excited. Sorry, I'm just kidding. Hey, I own Bitcoin.
Well, on that note, what would you tell someone that their kids bought them some Bitcoin back in 2017 or 18 or something? Now they're sitting on massive gains. What advice would you have for them right now?
Give thanks. They can get the first turkey leg.
Okay.
Right.
Okay. There you go.
All right. Have a happy Thanksgiving, everyone. We're always thankful for questions from our audience. askthecompoundshow@gmail.com. Leave us a review, rate, all that stuff. Especially on a podcast. Thank you. If you're live and in person on YouTube or Twitter, we appreciate you too. See you next time.
Thanks, everyone. See ya.